Trading, at its core, is really just the process of buying and selling assets in order to make a profit. People have been trading for thousands of years, but the assets themselves, well, they change over time. Today we're going to look at two very different types of assets. One is as old as the Earth itself, and the other is a product of, modern technology. We're talking about forests and cryptocurrencies. Understanding these two markets is, honestly, essential. It helps us see how value is created and exchanged in such different ways. Each market operates under its own set of principles and realities. We really have to study them to understand them. Forest trading, for example, involves buying and selling timber and other forest products. This is a market based on tangible, physical assets. You can actually touch the trees. You can walk through the forest. The value comes from wood, paper, and other materials that society needs. Companies and investors buy large areas of forest land, and they manage these forests to produce timber sustainably over many years. The goal is to harvest the trees at just the right time to sell for a profit. This is a long-term investment, and it's directly connected to the physical world and its cycles of growth and renewal. On the other hand, we have crypto trading. This is a new and honestly very different world. Cryptocurrencies like Bitcoin or Ethereum are digital assets. They exist only as data on a computer network called the blockchain. You cannot physically hold a Bitcoin. Its value isn't based on a physical object. Instead, its value comes from supply and demand, the technology behind it, and the belief of the people who use it. Traders buy and sell these digital coins on online exchanges, hoping to profit from rapid price changes, which can happen in minutes or even hours. This market is fast, global, and operates 24/7. Both forest trading and crypto trading are ways to seek profit. They're both markets with buyers and sellers. However, the similarities pretty much end there. One is slow, physical, and tied to the natural world. The other is fast, digital, and tied to technology and human sentiment. Understanding their fundamental differences is the first principle for anyone considering entering these markets. To make good decisions, you absolutely must see the reality of each system clearly. You have to understand the mechanics of how each one works before you can hope to succeed within it. This really requires a deep and thoughtful approach. The most fundamental difference, honestly, is the nature of the asset. A forest is a tangible asset. It has intrinsic value because its wood can be used to build houses or make paper. Its value is tied to the real-world economy and the demand for physical goods. This makes its value more stable over the long term. Economic cycles, construction trends, and population growth all influence the price of timber. A crypto asset, however, is intangible. It is a digital token. Its value is largely based on speculation and belief in its future potential. It has no physical form, and its utility is still being debated and developed. This leads to another major difference: volatility. Forest markets are generally low volatility. Tree growth is a slow and predictable process. Prices for timber do not typically swing wildly from one day to the next. It is a market for patient investors who think in terms of years or even decades. Crypto markets are the opposite. They are known for extreme volatility. The price of a cryptocurrency can double or fall by half in a very short period. This high volatility creates opportunities for large, quick profits, but it also creates the risk of large, quick losses. The market is driven by news, social media trends, and investor sentiment. Regulation is another key area of divergence. The forest industry is heavily regulated. There are laws about land ownership, environmental protection, and sustainable harvesting practices. These regulations are well established and provide a framework of stability and predictability for investors. This reduces certain types of risk. The cryptocurrency market, by contrast, is still in its regulatory infancy. Governments around the world are still deciding how to handle it. The rules can change quickly and unpredictably. This lack of a clear regulatory framework adds a significant layer of uncertainty and risk for crypto traders. Finally, the market structures are completely different. Forest trading often involves complex private transactions, auctions, and long-term contracts. It is a less accessible market, often requiring significant capital and specialized knowledge to enter. You might need to deal with land brokers, forestry consultants, and legal experts. Crypto trading is highly accessible. Anyone with an internet connection and even a small amount of money can open an account on an exchange and start trading. The market is decentralized and operates continuously across the globe. This accessibility is one of its main attractions, but it also means it is open to everyone, including uninformed speculators. Success in forest trading really requires a specific set of skills. You need a deep understanding of biology and ecology. You have to know about tree growth cycles, soil types, and sustainable forest management. Business acumen is also critical. You need to understand supply chains, commodity markets, and long-term economic forecasting. Patience is perhaps the most important virtue. This isn't a get-rich-quick scheme. It's a long-term commitment that needs careful planning and a disciplined approach. The ability to negotiate complex land deals and navigate regulations is also essential. These are skills built over years of experience. The skills needed for successful crypto trading are honestly very different. Technical analysis is a key skill. This involves reading price charts and using statistical indicators to predict future price movements. You must be able to process information quickly and make rapid decisions under pressure. Understanding the technology of blockchain is also important. You need to know the difference between various crypto projects and assess their potential. Most importantly, a crypto trader needs strong emotional control. The extreme volatility can cause fear and greed, leading to poor decisions. Managing your psychology is honestly as important as managing your money. The risks in each field are unique. In forest trading, the risks are often physical. A forest fire, disease outbreak, or insect infestation can destroy your asset. There are also economic risks, such as a long-term downturn in the construction industry that reduces demand for timber. Regulatory risk is also present. A change in environmental laws could affect your ability to harvest. These risks are typically slow-moving, giving you some time to react and mitigate them. They are grounded in the physical world and can often be insured against. This makes the risk profile more manageable for long-term investors. Crypto trading carries a completely different set of risks. The primary risk is market volatility. Prices can crash with little to no warning, wiping out your investment. There is also significant technological risk. A bug in a project's code or a hack on an exchange could lead to a total loss of your funds. Regulatory risk is immense. A government ban could make a cryptocurrency worthless overnight. Finally, there is the risk of scams and fraud, which are common in this new and poorly regulated space. These risks are fast, unpredictable, and can lead to a 100% loss in an instant. To summarize, we've examined two fundamentally different worlds of investment. Forest trading is rooted in the physical world. It's slow, stable, and tangible. Its value is tied to the long-term needs of society for physical materials. It requires patience, specialized knowledge of the natural world, and significant capital. The risks are physical and economic, but they tend to unfold slowly. It is a market built on principles of long-term growth and sustainability. It's a marathon, not a sprint, and is suited for those who think in decades. Crypto trading exists in the digital realm. It's fast, volatile, and intangible. Its value is driven by technology, speculation, and rapidly changing human sentiment. It requires technical analysis skills, emotional discipline, and the ability to act quickly. The risks are technological, regulatory, and extreme, with the potential for both massive gains and total losses in a short time. It is a market built on principles of disruption and high-risk, high-reward dynamics. It's more like a series of sprints requiring constant vigilance and adaptability. So, how do you choose a path? The decision must be based on an honest assessment of yourself. This is a core principle. You must understand your own personality, your tolerance for risk, and your time horizon. Are you a patient person who finds value in tangible, real-world assets? Do you prefer a slow, steady path to growth and have the capital for a long-term commitment? If so, the principles of forest trading may align with your nature. It's a path for the methodical builder who wants to see their investment grow like a tree. Or are you more energized by technology and fast-paced environments? Can you handle extreme psychological pressure and the possibility of rapid losses? Do you have a shorter time horizon and a desire for high-risk, high-potential reward opportunities? If this describes you, then the world of crypto trading might be a better fit. It's a path for the nimble opportunist who can navigate chaos. There is no single better path. There is only the path that is right for you based on your principles and your understanding of reality. Choose honestly.